I'm positive right now, and I'm not at all worried about things that companies are worried about, because this is the real world. What we're all adjusting to, and there are some investors out there who have no experience with this, is a market that is not under the continuous protection and manipulation of government, whether it's the Fed put or the Trump put with tax cuts. The effects of those things are wearing off now, and we're getting back to a normal market environment where some companies beat, some companies miss, and that's what it's supposed to be like.
And there's been 3 or 4 time periods like this where we've had kind of a soft patch. And what tends to happen after the soft patch is, we're basically preparing for the future. We're increasing our holdings in these companies that have been hit hard by large negative price movements, where in our view the values haven't gone down nearly as much, and in most cases the intrinsic value keeps going up. So this is really opportunistic. This is an opportunity for medium and long-term investors.
The ruling coalition in Italy is essentially a Donald Trump and a Bernie Sanders deciding to rule together, so they're going to lower taxes and raise spending, and clearly that's not going to work with the European Union. I think that's having a lot to do with global markets in the last several months, and a lot more than people think it has.
I've been counting all the corrections and mini corrections and two or 1 day sell-offs like the Brexit, and altogether in this bull market I counted 62 panic attacks, and this is number 62, and the question is this just a panic attack or is this something more serious? I think this too shall pass. As you guys pointed out, the outlook for the global economy still looks decent, maybe not great in emerging economies, but overall the feedback is we're still growing. The U.S. economy is still growing. I think what we're seeing here is stocks have gotten a lot cheaper.
And I still think that earnings are going to be better than expected coming into 2019 as the majority of corporate America remains more defensive. You've still seen that even in these earnings results. They're still kind of under promise, over deliver. I know there's individual stocks like 3M that did what they did, but that's why it's important to know that we are a stock market of stocks. And we firmly believe because of that, we're seeing firsthand on why investors should actually be more active and have larger positions, less stocks, and react and rely less and less on macro and index data.
The older tech companies actually are among the more reasonable stocks in the market right now. You look at the Microsofts, the Apples, I would buy them. The younger tech companies, I think, are being corrected, and I think legitimately so, because I think they had such a great run-up that it was just a matter of time before they corrected.